Hello everybody, welcome to this market report. Today we're Thursday, March 13. My name is Christian Charlo. Today folks, I want to talk to you about this market correction and how to trade this market's correction, because all markets today broke their yesterday's support. So we believe that today the best strategy to trade this market correction is to build up slightly your bullish exposure on bearish ETF. And then if ever markets break their support, then you might actually build up your short exposure. So this is actually where we are right now. So the TSX is having a correction. Why we think it's appropriate to actually build up your bearish exposure on your bullish exposure on bearish ETF? Simply because we have this support here, and technically speaking, there's a risk that we might actually rebound on that support. So while we have this correction, bearish ETF we think offer the best risk reward potential. And then if ever we go lower than that support, you might actually open some positions and some short positions on the markets. So which bearish ETF would allow you to make some money on the TSX? I think HXD is the best bearish ETF that is mostly liquid that could allow you to make some money. Also on the S&P 500, if ever we go below 183.94, then you can actually open some short exposure. But with this correction here, I believe that the best bearish ETF that you could track is SPXU on the S&P 500. On the NASDAQ, well, we have this important former resistance here that's becoming a new support. So if ever the NASDAQ goes below 4,224, I believe that you could short the NASDAQ. But right now, with this correction, the bearish ETF that you should favor is SQQQ. And it goes on for the Dow Jones too. As a bearish ETF, there's SDOW. And for the financial sector, because the sectors, though, are not in an ideal situation to short, because most of them are just having a correction within the upward trend. So in the financial sector, we could have a continuity of this correction if we reverse this upward trend, but we're not going to have nice shortable opportunity because the financial sector is not keeping a clear downward trend, right? So this correction here, I believe that if it continues, to trade that correction until this former support at 392 points is through a bearish ETF such as FAS. For the energy sector, our target is until 717, so it's ERY on New York. And for the EWM, it's an ETF that tracks small to medium cap stocks. And if this correction continues on the market, though, I believe that this ETF will definitely do well. So you should definitely take into account EWM. And for natural, and also you have TVIX or HVU. Those are the volatility index. And I think if whenever we have an increase in correction and a fear concerning China, fear concerning what's going on in Ukraine with the tensions mounting there, I believe that VIX and HVU will definitely be a key ETF to have in your portfolio. And just to finish, I want to show you natural gas. Natural gas finally is breaking this upward trend, breaking its support too. My target for natural gas is until 22. So I think that to trade that bearish shackle in natural gas is through bearish ETFs such as HND and DGAS. So this is the list though. For the S&P 500, you have SPXU. For the NASDAQ, SQQQ, the Dow Jones, SDOW. And for the different sectors, financial, energy sector, you have those ETF highlighted with an S here. And never forget, of course, you should also take into account HVU or TVIX, because those are ETF that tracks the volatility in the markets, and they will definitely be really active if the correction on the markets, if today's correction on the market persists for the next few days. So build up slightly your bullish exposure on bearish ETF, but if ever markets break their support, then you might actually open some position on some short positions on the markets. So this was Christian Charlo for MarketGurus.tv. You can have access to Market Gurus for free for 10 days just by clicking at the link below, and see you next week for your market report.